Great to see you all. Thanks so much for being here. The topic for our panel really is impact investing, and this has been a topic that has been, or an area that has been evolving over the last few years. I think that what has transpired in the United States in the last 4 months, but certainly in the last few weeks, should have a material impact on the topic. So what I'd like to start with all you all is if you could perhaps peel back, and impact investing also has sort of a wide definition, and I think sometimes can get confusing. So would love to have each of you speak to your view of impact investing, and how your perspective perhaps has changed and evolved, over the last few weeks, over the last few months, as the country has navigated a series of urgent crises. So anyway, Maia, I want to start with you. How about that?
Great, thanks, Deborah, and thanks for having me. I'm thrilled to join you and Ryan and Tracy on this panel. And thank you to JFF for hosting this. When we think about impact investing, we think about, the impact to learners and then society as a whole. So we're looking at what are those education-enabled or education that's enabled by technology that has an impact and that can scale and grow. So we are looking for novel, innovative approaches, not a continuation, but something that's really new and different that can scale and grow. We think about this in 3 different ways, really, as we measure it. So, as a venture capitalist, obviously, we're looking at returns. We're looking at financial returns. That's part of our remit. But we're also thinking about around reach, intensity, and performance, right? And those measures, if they are aligned, should drive towards the returns. Now, when we think about reach, intensity, and performance, it's different for every company. You cannot measure a K-12 company or an early childhood company the same way on reach that you would measure a corporate play or an enterprise learning play. So we watch this and we measure this across our portfolio quarter to quarter, reporting out and looking, well, how did this company do against the previous quarter and against the last year? And then annually we say, okay, do we have and are we looking at those 3 metrics and how do we increase that? And our founders are very aligned with this. We're fortunate to work with just fantastic people who believe in this as well.
Terrific. Ryan, do you want to kick in here next? We can't. You're on mute.
Sorry, here we go. Anyone who's followed our work knows that we've been pretty critical of traditional higher education for failure to focus on outcomes. And as we've pivoted increasingly to the intersection of education and employment, one good thing about that is that there is one very clear outcome, which is putting someone into a job. And so increasingly, that's what we're focused on. We are now tracking and reporting on the number of new hires, typically apprentices, that we're hiring on a quarterly and annual basis, and breaking that down in terms of percentage that didn't have traditional college degrees, percentage underrepresented minority, percentage women, percentage military background. And then because our companies are typically intermediaries feeding their clients across various skill gap sectors in healthcare and technology, we're also tracking the percentage of our hired apprentices who successfully complete our last mile training programs along all those demographics. And then we're tracking the percentage who are then staffed to clients, and then the percentage who are converted by clients as full-time employees, and then tracking the average starting salary of those consultants once they're converted to employees. So again, one good thing about being focused on employment is that there are very clear metrics that we can track and report on.
Terrific. And Tracy, you're really in a different world than Ryan and Maia. So love to hear your perspective, and obviously coming at it also from a different sort of governance structure.
Thanks so much, Deb. And it's great to come after Maia and Ryan because we are a very unusual animal in the broader impact investing field. And Deb mentioned we are a C3, but we're an impact investing C3. And the way we come at impact investing is not through the traditional asset classes, whether it's investing in private companies, which is mostly in Maia and Ryan's case, early stage or late stage, or in the public markets. We actually create bespoke impact investment opportunities to enlist private investors to actually invest in projects that directly lead to the improvement of lives. So when Ryan talked about outcomes, that's very much what animates all our work. The two tools that we've put out in the world, we're a 10-year-old organization. One is the social impact bond, and then the other is the career impact bond. And I'll just spend 30 seconds on the social impact bond, and then very quickly on the career impact bond. The social impact bond is simply about using private capital to realign how government spends money on social problems. We have these big problems, not because the public sector doesn't spend a lot of money on them, but because the money isn't spent around outcomes. Again, picking up on Ryan's term. So whether it's, a workforce development program for immigrants and refugees, which is what's happening in Massachusetts, or a program we're doing in New York and Boston, focus on helping veterans with PTSD get jobs and keep jobs. Investors' returns are completely tied to metrics that are predefined in the contract with government. And if we don't hit the metrics, people stand to lose some of their principal. So that is one pay for success strategy, using private capital to enable governments to pay for success. And then a more recent strategy that we just launched, and it's great that this panel precedes the next one on education finance, is the career impact bond, which is just a different riff on the income share agreement. But unlike the kind of impact agnostic income share agreement, which is simply yet another education and skills financing tool, we really think about the career impact bond as a tool for impact. So the target population is very delineated. I can give you some examples of a recent deal that we just launched with General Assembly. And it's not just financing the tuition, it's also financing folks to address the barriers that keep them from persisting and graduating and getting jobs. But in both of these tools, these impact investing tools, the outcomes, the metric is very much articulated. We define it in a very intentional way, and we measure it in the same way, and then we hold ourselves accountable to achieving them, which is tied to the investor returns.
I'm going to start with Tracy. I'm going to come back a little bit to thinking about the pandemic. It has certainly had a massive impact on the digital learning space. So for Maia and Ryan and me, and then the Black Lives Matter movement, critically important Black Lives Matter movement. How has that, and then tying the former on the pandemic and the loss of jobs, how do you feel about the ISA market? I mean, it's obviously there have been positive and negative impacts from everything that's happened in our country in the last 4 months. Can maybe each of you all speak to both, and maybe Tracy, start with you, since you left me with the ISA piece, and I know there's quite a bit of angst in the market around ISAs and the ability to place people in an economy that's going to be as weak as ours is now.
It's an excellent question, Deb. We think about it in three dimensions. One is the target population, and which is where our work is very different from the traditional ISA market. The second dimension is who are the providers? And then the third dimension is, what are the jobs and occupations that are still here with the massively evolving macroeconomic environment. So on the target population, we are very focused on people of color, people who are low income, people who are on public benefits, people who've been on EITC, so quote unquote, kind of, vulnerable folks. And with 40 million displaced workers, the need is greater than ever. So we don't need to debate that. Right. But importantly, the financing gets a little bit more expensive, because by targeting these people is actually, you need to think about also the wraparound supports to enable their success too over time. The other two dimensions are a little trickier. So while a lot of the ISAs are focused on the 4-year higher ed environment, our approach in the Career Impact Bond is largely focused on the much shorter term credentialing licensing program. So your 3-month coding boot camp at General Assembly, your 4-month truck driving license you can get, advanced manufacturing, welding, nursing, sterile instrument cleaner in the hospital, you name it. And while some providers can actually meet the challenge to deliver online, like our partner at General Assembly, some others are either having a much harder time, or you need the truck driving hours, you cannot do that online. So that has definitely impacted our work. And then the last dimension is probably the most critical one, is while some jobs are going away, there'll be new jobs, and it's very contextualized. And Ryan and Maia would know this. Just because IT might be quote unquote still increasing job postings, but what about specific IT jobs? Network administration is different from user interface, is different from cyber, is different from software engineering, and also geographically how this shows up is also very different. So thinking through each of these 3 dimensions and making sure that we're really leaning in, because vulnerable people are going to be the first to be affected and the last to recover, kind of first out, last in, right? Like whatever that acronym is, not good.
Precisely. Maia, you want to tackle that?
Thanks, Deborah. Yeah, so, it's a double whammy. Our company, starting in March, obviously with COVID, really had to rethink and kind of reposition and say, how do we best serve in this market? And now with the advent of the Black Lives Matter movement and the disparity that first showed up with, it's always been there, but it showed up with COVID. And now, luckily, we're talking about it on a national and a global stage. So the good news is we're talking about it. The other good news is our companies are working to support families who need help. So, with the COVID, we had a lot of our company, majority of the companies in our portfolio started offering services for free, right? So making their content and their curriculum available for free. Varsity Tutors, for example, started streaming 24/7 because kids weren't in the class. They started streaming programs all the way K-12. And other companies did similar things. What we're seeing now is an extension of that. So while we initially thought that would only, kind of extreme through the end of the year, we're getting towards the end of the school year and we're seeing that. What it doesn't address though, Deborah, is the digital divide, right? So as we talk about, as all 3 of us talk about this, and as all 3 of us think about, the services that our companies offer, it's digital or it's, technology enabled. So there is that platform. And so, I think that as we go forward, the entrepreneurs that are coming up, existing and new ones, will really it's a fertile playing field to find new approaches and new ways to address the actual inequity that exists.
So are you, a big focus of mine too, are you optimistic coming out of this that, we all knew the digital divide existed, this just brought it out in technicolor. And the way I look at it, we talk about remote learning, it's really home learning. And what we're saying is that low income students can't do home learning digitally, which puts it at a severe disadvantage to middle and upper income students. Do you think, and some districts did it really well. Are you optimistic? Are you all at Learn optimistic that coming out of this, we're going to get the right attention and the right resources on this issue?
Yeah, so I think what you're focused on right now is K-12, and
and obviously goes through the whole pre-K to grade everywhere.
Yeah, exactly. Yeah. Absolutely. So I would break that down. So like kind of pre-K to 12, I would say, yes, we're actually seeing movement. So, I was just last week on a panel with a bunch of superintendents, and they are all looking at this and taking it very seriously. I'm not saying that they weren't doing that before, but now they have the mandate. They have the boards behind them. They have the parents out, in the streets pushing from the front. So you have this pressure that I think will start to be resolved in positive ways. When I look at the adult learning space, and that's broken down in a lot of different ways as well, corporations are stepping in, right? That coupled with the fact that a lot of corporations are putting in robotic solutions, so they're going to need to reskill their existing workforces and think about who they're pulling from to reskill. So I think that they now are also under the spotlight. And then that leaves the folks in the middle, which is really higher ed. And that, COVID and now these latest unrest, I think is just accelerating changes that we've already seen. We know that, going to, not all degrees are equal, whether it's 2 years or 4 years. You can spend a lot of money and end up with, no job or really kind of not a better future that you dreamed of. So I think that as we see financial pressure on those institutions, as we see folks in the ed tech space come up with new solutions and new funding mechanisms. We have, Tracy, to your point, we have several innovative folks who are working on ISAs as well, income share agreements as well. We'll start to see that fundamentally change. So we're very excited by this. All of this is in the forefront. The backdrop is the increase of digital penetration in education across the board, right? So we've gone from 10 years ago, it was 1% digitally penetrated globally. Now we're at 3%. We had anticipated that it would be about 10% by 2030. That could now be 10% by 2025 and 20% or more by 2030. So, there's lots of room for change. We're very bullish.
Great. Ryan, you want to bring it home?
Yeah, sure. Look, I think the skills gap and opportunity gap were massive before COVID. Right. We had tens of millions of American workers who were just out of position relative to what employers were seeking. We had 7 million unfilled jobs. We had 45% underemployment out of college when students are struggling with, on average, of $40,000 of student loan debt. It was a huge problem. And so Daniel Pianco and I, a year ago, we launched a new firm called Achieve Partners, and our new fund, we named it Putting America Back to Work. And now COVID has lit the fuse on the situation, and the name of our fund now makes sense to more people. But there's a desperate need for new pathways to work, friction-free pathways that don't require you paying tuition or taking on tens of thousands or hundreds of thousands of dollars in student loan debt, pathways that will smooth your way to a job, hopefully by guaranteeing a job, really apprenticeship type models. And so those are the models that we are focused on, employer pay models where you have an intermediary that is absorbing all the education friction from the candidate and hiring friction from the employer. That's a huge part of the skills gap, is that employers have become much more reluctant to hire candidates who don't literally fit every term in their job description. And that's a natural byproduct of the increased cost of bad hires and increased churn at the entry level. But that's kind of where we are. We're actually, I could announce today that our new fund has made our first major investment, which is we've acquired a large healthcare IT solutions business that implements, configures, and integrates electronic medical records systems. And we're going to use that platform. It's a large-scale platform to create the first major healthcare IT pathway into healthcare IT careers that will be friction-free. So candidates will be hired from day one, will be trained, and we're hopeful that in a few years we're through putting thousands of purpose-trained healthcare IT talent on electronic medical record systems into thousands of hospital systems around the country that just simply can't find that talent today.
Bravo. Congratulations. That's dead down the middle theme. That is for sure. And with that, I think we have hit our mark, 20-minute mark on the dot. Thank you guys so much. We could, this talented group, we could go on for hours, but thanks to JFF. It was a terrific conversation, and on to the next one.